Good morning, 11:45 a.m. Pacific Standard Time, 8/19/2012. Can this bull rally continue? We are at multi-year highs. As we have covered, we're within a few points. We were within a couple of points of breaking that 1420, 1422 right here on this S&P 500. The reason why we're highlighting the monthly chart, because it's easy for you to see that every one of these dips on the S&P going clear back to the financial crisis. This is where we have finally taken out a major 2011 high. We had the 2012 high, and we're right back here right now. So we're going to caution people that the S&P 500, as we've said in other live analysis, is that we're going to have problems if we do clear that high and we can make it up to that 1445 area, 1450 area, which would be multi-year highs, calendar multi-year highs. I mean, we were over here. This is where it all started. However, we're at the wall of resistance. We're short-term overbought on the S&P 500. It's time for investors to take money off the table, and it's time to ring the cash register, because once we were up here the first calendar year, we had to sell short the S&P and we made money. And of course, then we had our great bull rally here in the summertime on very, very low volume, which is fine. Never fight the tape, go the way the tape is going. So we participated up here to this resistance level, but we will start telling MMTs it's time to do what? Look at the other side of the bull. Can this bull be sustainable at this level? It's the calendar year. It's the lightest volume other than December. August can be this way. Everyone's on vacation. It's easier for the markets just to grind higher. People today don't understand the lower on balance volume, as we told people a couple years ago that volume was going to change because of less participants in the market. And what we will tell people is to start looking at the other side of the S&P 500, because the put side and the call side ratio, that means the call side and the put side, it has a mathematical ratio, and it's very imbalanced right now. And once again, we call the major bottoms when it's time to get long. But then again, just like here in that rally, we went barreling right up 3 months to these highs. We tested this major area right here where it started in 2008, right where this pointer is. We went straight down, but we're here. Can the bull rally be sustainable? Selling into the rallies and looking at the other side of the market, because you see, the bull is overbought on the S&P. Yes, we can break resistance and go higher. However, once we do break these higher highs, multi-year higher highs within the bull is going to start getting kind of shaky up here. And if you own S&P 500 stocks, it's time to ring the cash register. We've always told people that, and we haven't been wrong. And we have the live analysis, just like we did here. And just like we did in any of them, at the tops, they come down. And I'm showing it on a monthly level here. In 2011, we went straight down 5 months before we hit that bottom. But then we rallied up, made all-time highs, and went through resistances here. So, be cautionary on the S&P 500, multi-year highs, lower volume. The dog days of summer are in play. Things are going to change significantly with going back to school. They're printing money around the world. We have a Jackson Hole meeting coming up with Ben Bernanke. Is the Fed going to move in or not? It's everything that the market's been chewing on during this whole rally. So I can tell you, worldwide, they better be printing more money. And Ben Bernanke, we got this election year. The thing that they don't like, people don't know what they're going to be paying in taxes. People don't even know if they're going to be having a job. Yes, retail sales have done better. Yes, there's been some improvements, which is good, but it's really not enough to cut the mustard. We will be selling into major resistance levels on the S&P 500, and what we'll end up doing is looking at the put side of the market, because that is the cheapest side of the market. When we were here at the bottoms, the call side ratio was the cheapest side of the market to be on. This is no longer the case. Yes, it's been a 3-month lateral ascending breakout from the lows of support right here. Bam. So I'm going to tell people one thing. You have to know when to lighten up into resistance and look at the other side of the market and where the market may get into trouble if things go wrong. You don't want to be caught up in here in this kind of environment that we're in right now. So there's this 1450 mark. If we can break this resistance level, we're looking over here at 1443. And just like we said when we were back over here on the calendar month, coming off of this low here, that the S&P had a lot of room to go. However, all the big firms like Goldman and everyone else around the world only has the S&P being worth 1250 on the S&P by year end. So once again, there is a big disconnect. And this is where that short was for us right here. So this is the whole yearly move right here. This is 2012 on a monthly level. And we've gone the distance here. We pull back to the support level and we've gone the distance. However, there has been no major improvement fundamentally. Beware, be caution, look at the other side of the market. That's the cheapest side of the market. Bear funds are at multi-year lows. The fear indicator, which is the VIX, has been extremely complacent here, and I'll just throw this VIX in here. We're so complacent at where corrections do take place. Look at on a monthly level. There is no fear. They're back down here lower than the 2011 and 2012. When that thing broke and we went straight higher up there, the market sold off hard. I will tell you, be aware that the complacency and the least amount of fear, even though there isn't a lot of people in the market, look at that monthly move down. We could come all the way down here. It's not unheard of. And that's the S&P 500 volatility index, really, basically the VIX.X. So once again, I will conclude this video with the MMTs and our people from around the world is that we're hitting a major wall of resistance in a very low volume tape where things could turn significantly. The higher that we break, the more overbought in that extreme where corrections do happen.